April 13th, pre-market. US-Iran talks collapse. Weapons are being armed. So what happens on Monday's open? Greetings everyone, James here. It's now 6 a.m. Eastern Daylight Time on April 13th. If you took your eyes off the screens this weekend, I have to pull you back to reality right now. Peace trade is dead. I'm going to tell you three things right now. First, the US and Iran held 21 hours of talks in Islamabad, but failed to reach any agreement. Vice President Vance stated personally, Iran chose not to accept our term. The Iranian side claimed the US was demanding too much power. Control over the Strait of Hormuz and uranium enrichment rights were the true sticking point. And number two, Trump stated that US forces are loading up new weapons, preparing to take action in the absence of a deal. Netanyahu declared that Israel still has a mission to complete. This isn't just saber-rattling, it is a state of genuine military readiness. And three, last night, Israel Prime Minister publicly announced that they had successfully destroyed Iran's nuclear and missile programs. And yet, in the very same sentence, he added that military operations are not yet over. Now, this sounds like a victory declaration, but have you ever met someone who, after winning a battle, claims their mission isn't finished? Dow futures opened at 6 p.m. last night and are already showing clear signs of decline. And today we're going to clarify three things: what happened, how the market will price it in, and where you should be focusing your attention next. Now, there is a certain in-depth analysis that I won't be able to fully unpack during this public live stream, such as my projected trajectory for oil prices in the event of a complete blockade of the Strait of Hormuz, as well as my sector by sector and stock by stock trend forecasts. My assistants have a complete and compiled version ready. You can contact them to receive the specific trading strategy. So let's get started. The true meaning of the collapse talks: it's not a pause, it's a signal. Many people might still think, so the talks failed, just schedule another meeting. But at the same time, this is different. The US dispatched Vance, Kushner, and Witkoff. Iran sent its foreign minister and parliament speaker. And this represents the highest possible level of face-to-face negotiation. And they talked for 21 hours, and the talks, well, they just collapsed. This wasn't a matter of needing technical adjustments. It was a fundamental clash of irreconcilable positions. So, what does Iran want? The control of the Strait of Hormuz and the right to uranium enrichment. These are the areas where the US cannot interfere. So, what does the US want? It wants Iran to abandon the path to nuclear weaponry, keep the Strait of Hormuz open to global traffic, and submit to comprehensive inspections. There is no middle ground between these two frameworks. So, what's my observation? The breakdown of negotiations at the table signals that the weight of military option is increasing. Trump speaks of loading up on new weapons, while Netanyahu declares there are still missions to be completed. These are not diplomatic niceties. They are operational directives. So, what are your thoughts? Do you believe the US and Israel will launch a military strike against Iran within the next 2 weeks? Give me a 1 if you think they will. Give me a 2 if you think they won't. And now let's talk about oil prices. The Strait of Hormuz is the real trump card. Brent crude closed last week at $94.25 per barrel, having fallen from its year-to-date high of $119.45. However, that decline was driven by the illusion of a 2-week ceasefire agreement. And now, the validity of that ceasefire agreement is being called into serious question. Why? Because the Strait of Hormuz remains, for all intensive purposes, closed. Iran is levying tolls and dictating which oil tankers are permitted to pass and which ones are not. Even with the existence of a so-called ceasefire agreement, this fundamental issue remains completely unresolved. So, wake up, my friends. Trump has just personally torn up the very last shred of hope for peace via social media. He has announced a dual blockade. He intends not only to blockade Iran's ports, but also to intercept any oil tankers that have paid tolls to Iran. He describes his action as clearing out piracy. But really, what does this imply? It means that if you are a ship owner, if you pay Iran, the US military will seize your vessel. If you refuse to pay Iran, Iran will attack your vessel. The Strait of Hormuz has now transformed into a deadly black hole. Current oil prices have not yet factored in the expectation of active interception by US forces. If you ask me, for my thoughts on Monday, all I can say is buckle up. Energy stocks and physical gold are about to experience an epic surge in premiums. Now, data from Polymarket indicates that traders believe the probability of Western Texas Intermediate crude jumping above $105 per barrel this month is on the rise. My thoughts? Current oil prices do not fully price in a scenario where the Strait of Hormuz is completely cut off. If we actually reach that point, the price won't be $115 nor $120, but significantly higher. This is because approximately 20 million barrels of crude oil pass through the Strait of Hormuz every day. A 1-week cutoff would deplete global inventories. A 1-month cutoff would cause the price discovery mechanism to break down entirely. So what do you think? Do you think West Texas Intermediate crude will break above $105 before the end of April? Give me a 1 for yes. If not, give me a 2 for no. Now, let's talk about gold. Markets closed for the weekend, but pressure is building. Gold closed the previous trading session at near $4,749 an ounce, having oscillated with a narrow range between $4,700 to $4,800 an ounce throughout the week. So, from a technical perspective, 4,800 serves as the resistance level, while 4,700 serves as the support level. Now, gold markets remain closed for the weekend on April 11th and April 12th. My thoughts? Gold currently serves as the most honest barometer of risk aversion. Stocks may experience technical rebounds, and futures markets may see sentiment-driven corrections. However, gold's price reflects nothing but the equilibrium between fear and liquidity. Meanwhile, central banks continue to buy. ANZ forecasts that the central bank gold purchases will reach approximately 850 tons in 2026. And Goldman Sachs and JP Morgan have issued price forecasts ranging between 4,000 and 6,300. However, the most critical factor at Monday's open will not be technical analysis. It will be what transpires between the US and Iran over the next 72 hours. If gold gaps up and breaks decisively above $4,800 at Monday's open, it signals that smart money is positioning itself for a worst case scenario. So what about you? Do you think gold will open above or below 4,800 on Monday? Give me a 1 for above and 2 for below. Now, let's talk about the broader market. Fear reflected in futures. Dow Jones futures opened tonight at 6 p.m. Eastern Time, and early signals point to a distinct decline. Now, there is a crucial distinction to be made here. US equities actually rose last week, and the S&P 500 recorded its strongest weekly gain since November. Why the rally? Because when the ceasefire agreement was first announced, the market traded the ceasefire as if it were peace. And now, negotiations have collapsed. The ceasefire agreement is effectively dead, and the risk premium on oil prices is once again accumulating. So, what are my thoughts? The sentiment at Monday's open is unlikely to be one of panic selling. That sort of reaction typically occurs in the immediate aftermath of the news breaking. What is more likely to happen on Monday is this: a slight downturn at the open, followed by a divergence in capital flows, and some investors will capitulate and exit the market, while others will begin seeking safe havens with defensive sectors. Now, what are your thoughts? What's your current cash position? Give me a 1 for 0 to 20%, 2 for 20 to 40%, and 3 for over 40%. And now, I know some of you in the comments section are already asking, well, what should I do with my energy, tech, or gold stocks on Monday? I cannot answer these questions directly during a public live stream, as everyone's position is really size-based, cost-based, and risk tolerance are all unique. So instead, just please reach out directly to my assistant, provide him with your stock tickers and a rough overview of your position details, and he will compile the information and then forward it on to me. I'll then provide you with a personalized assessment via a private response. Now, let's continue. My overall thoughts and what I'll be watching on Monday's open. Once the market officially opens on Monday, I'll be keeping a close eye on 3 key indicators. The opening value of the VIX. If the VIX gaps directly above 35, it signals that institutional investors are actively establishing hedge positions. This isn't panic, it's a calculated defensive maneuver. The magnitude of the opening gap in gold prices. If gold opens directly above 4,850, it suggests that the pricing of the Middle East risk premium is converging towards a worst case scenario outcome. The divergent spread between the energy and technology sectors. If the energy stocks rally by more than 3%, while tech stocks fall by more than 2%, this constitutes a textbook example of a geopolitical rotation. Capital is being withdrawn from high valuation growth stocks and reallocated into tangible assets and safe haven assets. All right, that wraps up my complete pre-market outlook for today. And finally, here are 3 things you can do right now. First, hit that notification bell. I may host a short impromptu live stream tonight around 6 p.m. to provide immediate analysis of the pre-market signals right after futures trading opens. If you don't have notifications enabled, you'll miss it. Second, my assistant's contact details can be found below. Find him and add him as a contact. My assistant will then add you to my exclusive analysis community. Tonight, once the futures markets open, I will post a hand-drawn chart in the group, a projection of potential oil price trajectories under a Strait of Hormuz blockade scenario, and members of the community will get to see this before it is shared during the public live stream. And number 3, if you would like to receive all of the key data points I mentioned today, including the complete timeline of the breakdown in US-Iran negotiations, a real-time tracking sheet for oil flows through the Strait of Hormuz, and my projected price levels for various sectors and individual stocks at Monday's market open, simply contact my assistant directly to request them. I will send them all to you completely free of charge. All you need to do is let him know that you are reaching out because you watched this live stream. Now, remember, extreme volatility triggered by geopolitical events serves as a crucible, a battleground for the redistribution of wealth. Do not recklessly apply leverage before you have seen a clear confirmation signal. And certainly do not blindly give into greed while others are gripped by fear, unless you have truly discerned the underlying direction of capital flows. The weekend is not a time for rest. Rather, it's a time for the astute to position themselves. So, I'm James, looking forward to seeing you in the community, and I'll catch you at the market open on Monday.